We've seen that the car market leader, the quarter gone by, the September quarter, was a record quarter for the company. This is primarily because of a higher sales of SUVs, which in turn bumped up companies' overall earnings, be it net sales, be it profitability, or be it margins. So that's one of the key highlights for the current quarter. So the net sales, for instance, it went up by as much as 24%, whereas the net profit soared 80%. The company has never had this kind of upsurge in the net sales. That was primarily driven by a better product mix, a richer product mix. So the sale of SUVs, the utility vehicles, as they call it, in Maruti's overall portfolio, in the domestic market, it went up as high as 37%. And on the contrary, the sale of the small cars, which used to be a bread and butter segment till a few quarters ago, it has gone down by 55%. So it's because of the transition from the cars to the SUVs, we saw the earnings really getting a big boost. Also, one has seen the company also benefited from the softer raw material prices. The raw material prices as a percentage to net sales for the company has declined quarter on quarter as well as year on year. Similarly, overall other expenses have also seen a drop. So these are the key highlights for the earnings. R.C. Bhargav, the chairman of the company, they spoke. He had a call with the reporters after the earnings, and he highlighted that while this is very commendable that the company is very pleased with the performance, but he cautioned that this may not continue because the sales of small cars, which is the core segment for the company, that has to revive. So it is not sustainable in the long run. And he cautioned that such models, those priced below 10 lakhs, sales of such models are unlikely to revive in the next 2 to 3 years because the purchasing power of the small car buyers has got severely eroded. That's primarily because there are a host of regulatory changes that have happened in the small car market, which has made a cost of ownerships very, very expensive. And they have sort of fallen out of favor, and people are preferring an SUV to a small car. The small car buyers, I mean, the guys who were upgrading from a two-wheeler to a car, they are just sitting tight. They are not really, they have postponed their purchasing decision indefinitely. So Bhargav pointed out that it will take a while. So till the income levels increase, till the increase in the income levels is higher than the increase in the car prices, it is unlikely that such buyers, the so-called first-time buyers, are unlikely to come into the market anytime soon. So now that's a worrisome trend. He also highlighted that the market has already shown some signs of a slowdown. And he said that the auto industry feels that unlike the last 2-3 years, we've had a bull run when it comes to volumes and sales. It is unlikely to happen in the coming in the fiscal 2025, because primarily because of small cars. So Bhargava pointed out that 100% penetration of as far as electric vehicles are concerned is not going to be a possibility for the Indian market. And the government has also realized that, and it has sort of changed its stance. So where it was, there was a point that the government officials, they were talking about reaching EV, having 30% of the total vehicle coming from electric vehicle sales. So that's not going to happen. And India as a market will need multiple technologies and multiple options as far as decarbonization is concerned. It has to be a combination of hybrid, electric, biogas, ethanol, and a few other technologies. So this was another important point that he reiterated. Therefore, the company will pursue its goals as far as decarbonization is concerned, keeping into consideration all options. It will keep all options open. Maruti in the past had talked about its plans of doubling the production to 4 million units by 2030. he updated us that those plans are on track. While the location for a fourth plant, which has yet to be finalized, is likely to be finalized by the end of the current fiscal, and the start of production from that facility will happen in the beginning of FY25.